we're really moving towards a reputation economy. AIs can't have bank accounts, but they can have wallets. And so, giving AIs the power to control wallets and spend that's what people are doing now.
What are the biggest myths people still believe about the nature of money in the digital age? Hello, everybody, and welcome to the Curiosity Code podcast. I'm your host, Alex, and today we're diving deep into the future of money, identity, and the very infrastructure that underpins modern financial systems. Joining me is David Birch, one of the world's foremost thinkers in digital identity, financial innovation, and the evolution of money itself. He is an internationally respected author, advisor, and speaker whose work has shaped how policymakers, technologists, and banks alike think about trust, wallets, and the next generation of digital infrastructure. David, welcome to the show.
Thank you. Thank you for inviting me.
Let's just dive straight into the subject of digital identity. You often said that identity is the new money. What does it mean in the world of CBDCs, biometrics, and decentralized finance?
Well, originally I was really thinking about just banks. And I think and many years ago, it became clear that the payment margins were getting a bit thin. It was getting harder and harder to earn money from payments. Banks were getting rid of their payment processing businesses. And it seemed to me that a lot of the problems we were facing in the payment space, fraud and so on, and cost of acquisition, etc., weren't really payment problems. They were actually identity problems. And the more time I spent thinking about this, the more convinced I was that it was identity, or more specifically, digital identity for a new generation. It was that we were missing. And if we had that, then, I know it's a trivial thing to say, and people often say it, but it's true. If you know who everybody is, payments are really quite easy. It's just updating some figures in a spreadsheet somewhere or a ledger or something. And so that's kind of got me focused on identity. And I began to think that actually the key role of banks in the value chain wasn't making the payment. It was knowing who people were and managing their reputations and so on. So there's a sort of bigger picture meaning to it as well, which is, of course, that in the long run, we're really moving towards a reputation economy where it's who you are. Actually, it's not so much who you are; it's what you are. And also who testifies and who vouches for that, which really determines the way commerce works and who can engage and who can transact. So if you like, there's the sort of small meaning, which is I kind of thought this is what banks should do. They haven't done it, but I still think they should be doing it. And then a comment about how the economy is going to work in general in the future. And if you want the story that really kind of brought this to mind for me, it's a very well-known story. But in the 1970s, there were some bank strikes in Ireland. The banks shut down and people couldn't get cash. They literally ran out of money.
Mm-hmm.
And economic studies that were done after this showed that GDP wasn't as effective as you would think, that with no cash, the economy would grind to a halt. But of course, that's not what actually happened, because what happened was people made their own money. They made their own IOUs. And because people had centers of trust, another word for these would be pubs, where people could assess the, if you like, the reputation. Like you know whether someone's going to be good for the money or not. If everybody knows everybody else, the fact that you don't actually have the money to transact sort of doesn't matter. It takes you back to what I suppose you could think of as a kind of a sort of medieval economy where everything is based on credit, and you borrow through the year, and then when the harvest comes, you pay everything off. It's like that kind of thing. If you know who people are, if you can assess their creditworthiness, so to speak, does it matter if you have the money to? And it was actually reading about that which kind of cemented my thinking, which is actually it's the identity that's the important bit. The payments are not, payments are important. You have to have them. They have to work. But if you know who everyone is, they're not that complicated.
I find this idea very beautiful, but at the same time, we live in a very fragmented world, right? With
Yeah.
more borders, different platforms, different regulations. Do you believe we'll ever have a universally trusted digital identity infrastructure or platform or
Well, now, of course, you're asking a horrible nerd now about this. So, so you have to unpick that for my answer to make any sense. So, do I think we'll have a universal digital identity? No, but we may have interoperable digital identities. But actually, that's not really the key issue. The key issue is the credentials. It's the facts about you and who attest to them. So, in other words, I might not be able to verify some foreign documents or source materials or whatever, but if the credentials are readable, that either and a good example of this would be ISO mobile driving licenses.
Mhm.
The fact is, I will be able to read an ISO mobile driving license and find out whether it's real. Well, I'll know because of the digital signatures, and if it's valid and all this kind of thing. So the interoperability of the credentials really is where we need to go. And on that, I'd say I'm more optimistic actually. I mean, I do think you begin to see driving licenses are one of the areas, but you see other people beginning to discuss things in terms of, for example, educational credentials or work credentials. I mean, some people joke about, LinkedIn creating this kind of universal identity network, but
So it's mainly a matter of um, international standards and adoption of majority of countries.
as I say, it's about credentials. It's about what you are.
Hmm.
In most circumstances we can think of, I need to know whether you're a qualified dentist or not. I need to know whether your qualifications are valid. I need to know whether you're authorized to practice. Do I need to know who you are? That's not clear, like your identity. And in fact, there's lots of reasons why you might want your identity to be private in many circumstances. It's the facts about you that are crucial to transactions. It's knowing what you are, not knowing who you are. And I think on that, we have the W3C verifiable credentials standard. We have the ISO MDocs and MDL standard. And so we do see things moving in that direction. Yeah, it's a long way to go, but we're heading in that right direction.
David, I'd like to get your perspective on subject of money in general. In what opinion, what are the biggest myths people still believe about the nature of money in the digital age?
I remember going to a meeting a few years ago at Chatham House, which is where they do research on foreign policy and so on. And we got into a discussion about money, and a very intelligent, well-educated journalist asked me a question which implied they thought that there was still gold in the Bank of England, which
Mhm.
was what was backing banknotes. Like your banknote somehow had some real asset underneath it. And, the idea that money is just made up seems odd to most people, but of course it's true. And I suppose the advent of things like Bitcoin and cryptocurrency has made people think a bit more about that in recent times. I was involved in an argument today on LinkedIn about whether money constitutes a debt or not, and this sort of thing. So I would say that's probably the biggest myth, that there's something backing money, because money as we mean it, there is no gold in the Bank of England. It's all about trust.
So, continue subject of money. Let's talk a bit about where we store the money. You've spoken quite a lot about smart wallets in the past. What role do you see them playing in shaping consumer behavior, financial control?
Well, I think that we're at an interesting point with this because, and in fact, in my last book, I wrote a book called Money in the Metaverse, about money in the future with Victoria Richardson. And one of our central predictions in that was that you would have wallets as the kind of organizing principle for commerce. But actually, the main users of those wallets would be AIs, not people.
Hmm.
I mean, now that makes me look like Nostradamus, but I mean, at the time, it seemed obvious to us that that was the way things were going. So when I say smart wallet, I very specifically mean a wallet that is being used by AIs. So 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 if you have a and you can see why this will happen, because most of the things that we do with wallets are quite boring. paying for parking and things like this. So when wallets can, when the AI can do that for you, I mean, people I'm sure will be only too willing to hand this over to AIs. So we need wallets that can be controlled by AIs as well as people, and those wallets are not just about money, of course, because if you look in your wallet right now, actually, if you look in my wallet right now, there is no money in it. Everything that's in my wallet is identity.
Right.
It's payment cards, it's tickets, it's licenses, it's loyalty cards. They're all identity documents, not money. So I don't think that's a particularly controversial prediction now. I think it seems fairly clear that most people will go over to AIs for that sort of thing.
So when you named back then smart wallets, the intelligence part was the actual artificial intelligence.
But yeah, well, as it's turned out, yeah, that's right. Originally, I was just trying to draw a distinction between because people were talking about super apps. We're going to end up with super apps, and I wasn't so sure about that. There are cultural issues there, but I thought there's a big difference between a wallet and an app. When you use an app, you're sharing your identity with all of the mini apps, if you like, or the an app shares identity. When you have a wallet, like your Apple Wallet, you share authentication. You have one authentication for every, but inside the wallet, you have potentially very different identities. This is how the book came about because I was sketching out some ideas for this, and I began to, as I started to kind of formulate my thoughts, I began to realize that wallets were at the center of it. And I'm not an absolute expert on wallets by any means, but my co-author Victoria Richardson is. And she was working for a wallet company at the time. So I called her up. And it's like all of these things, like you ask a couple of simple questions, and then you realize, oh my God, I actually don't understand anything about this at all. It's just like, how come we put the book together? But yes, it started just as a distinction between apps and wallets. And then the more we thought about it, the more it was clear that actually AI is going to take more and more of those transactions. The things for the average member of the public, and I include myself in that, you know, payments are just not that interesting. It's not fun. And when an AI can do it for you instead, that's great. And if the AI can make good decisions around that, when I finish talking to you, I'm gonna go to the store. I have to go and get some milk and a couple of other things. And when I go to the checkout, I don't wanna stand there thinking, "Oh, should I use my Amex Platinum card and get rewards? Or should I use my supermarket Mastercard and get cashback? Or should I use my British Airways card and get Avios?"
Mhm.
And then look at my diary and work out, well, where am I going? Which flights can I potentially get? How much are those Avios worth? So does it make, like, no, I mean, I'm a normal person. I'm never going to do this. But for a bot, it's nothing. A bot can do this in milliseconds. And so I see a big transformation there. Why would you want to pay for anything yourself when a bot can do it for you?
I love the concept. I never heard about it, but it's so obvious.
It's the wrong way around at the moment because if you look at what's going on with, you see those demos of Operator and things like that. The computer goes and picks the hotel and the flights.
Right.
Picking the hotel is the fun bit, like looking at the different hotels, looking at the rooms. So the AI picks the hotels and then you have to pay because the AI's got no way of paying for things. So you get to do the boring bit, which is paying for things, and the AI does the fun bit, which is looking at the different hotels. This is the wrong way around. I should be doing the fun bit of, actually, I don't want to do any of it. I want an AI to do all of that. But I know a lot of people would like to look at the hotel rooms and what's the view like and all this kind of thing. So I think that the idea that people will want to make these decisions, they'll want to do it themselves. To me, that doesn't seem right. I think no, I think that stuff will go to bots quite quickly. So bots have to have access to the wallets, and that means we have to have some kind of infrastructure for that, because if my wallet goes to pay for a hotel or something like that, the hotel needs to know, well, who is authorizing this? Oh, okay, it's this AI. Well, who said that AI is allowed to book hotels for Dave Birch? Oh, okay, here's a credential which says this. Who says that he is allowed to spend up to $1,000? Oh, there's a credential that says that. So we want it done correctly, with an infrastructure there to support it. But yeah, I don't see that as controversial. Payments are not interesting.
Is it where the CBDCs will, take some role?
Personally, I think that's a very different topic. I think people who are experimenting with AI to AI payments now, by and large, are using stable coins. And the reason they're doing that is, of course, banks don't offer any product in that space. You
Hmm.
know, my bank, you know, AIs can't have bank accounts, but they can have wallets. And so, giving AIs the power to control wallets and spend so that's what people are doing now. And now, and you can sort of see why that is because there's no alternatives there. Downstream, that wouldn't be true. The AIs would have a choice of different ways of doing this. Now, would they do things which require the old-fashioned infrastructure of clearing and settlement? But, probably not. So would they use stablecoins or CBDCs? I can see exactly why they would do that.
So, what's your take on the global race to develop CBDCs in general?
I'm thinking out loud because this is an interesting topic, and I'm not sure what the answer to it is either. But it seems to me CBDCs and stablecoins, it's apples and oranges.
Hmm.
CBDCs have goals which are nothing to do with the payment mechanism.
Hmm.
If you're going to have a CBDC, it has to be about inclusion. It has to be about innovation. It has to be about the resilience of the payment systems. It has to be about, let's call it sovereignty, things like this. It has goals to sort of make the country better off, make citizens better off. Stablecoins don't have those other goals. So that's why I think stablecoins and CBDCs are different things. I just wrote a thing talking about how, I think actually central banks can learn a lot from what's going on in the stablecoin space. But no, they're different things.
So, in your opinion, how central banks can avoid replicating problems and shortcomings of the traditional financial systems when they, working on CBDCs?
Well, I would say that CBDCs should focus on doing the things that, to some extent, the private sector won't do. CBDCs are about meeting national goals, national requirements. So, for example, I could make an argument that says CBDCs have to work offline. If there's
Hmm.
a flood or if the power goes down or, if the systems crash, you should still be able to go to the store and buy some milk with your mobile phone and your CBDC. Well, stablecoins don't have that requirement. That's not what they do. So CBDC should focus on those things which are good, which the country needs to improve the lives of citizens, but are not delivered by the private sector.
If you were advising the Bank of England today, what's one principle you'd insist they adopt in their CBDC strategy?
One principle will be offline. The other principle would be about inclusion. So at the moment, we have an old sort of, there are people who don't have a bank account, and there are people who have bank accounts that don't need them. And what I mean by that is most people, their core requirement is for a place where you can pay and you get paid. So actually, making people have bank accounts is an expensive and inflexible way of delivering that. You have this concept of basic bank accounts, everybody should be able to have that. But those are expensive to deliver, and people actually don't want them because they don't want all of the other banking stuff that goes with it. So the idea that people could have a simple wallet and with, very basic KYC, and that they could store, you know, up to a couple of £1,000 in it or something like that, just with a phone number. I mean, that's probably good enough. You don't want complete anonymity for reasons we don't want to go into at the moment. But, this kind of limited KYC, this is probably good enough. And it would make the economy work much better because then everybody could be paid and pay remotely as well. I mean, the dynamic at the moment, which is the people who are trapped in a cash economy, generally less well-off people, those are the people who have to end up paying most for everything. Those are the people who can't take advantage of online offers and deals and things like that. So, now I just think we need to start seeing stable coins and CBDCs as very different things. They can learn from each other, but they're not the same thing.
So we talked about digital identities, smart wallets, CBDCs. I'd like to touch base a bit on regulations. In your opinion, is it possible to design regulation that's both innovation friendly and resilient to financial crime? Or is that just, dream and wishful thinking?
One thing that a lot of people are unhappy with when you start talking about CBDCs and stablecoins and financial inclusion, they're unhappy about the idea that every transaction is spied on
Hmm.
and, with good reason. That's quite understandable. One of the interesting things we can do with digital identity, and this goes back to this point about credentials, is we can construct a fundamentally different infrastructure, which is based on proving what you are, without giving away your identity. I'll give you a very simple example. I want to buy, I don't know, drugs or something from you that I have to be 18 or guns or something. To use an American example. So I need to prove to you that I'm over 18. Okay. And I can do this with a verifiable credential, which has all sorts of cryptographic proofs around it. So we can do business. Now, let's imagine the proof that says I'm over 18 comes from, let's say for sake of argument, it comes from Barclays Bank. Now, if I go to commit some sort of crime, the police will go to Barclays Bank and say, well, with a court order and say, well, who is this person? 1, 2, 3. And they'll say, well, it's Dave Birch. So, which is good because you don't want people getting away with crime. On the other hand, if you don't have a court order, okay, then you shouldn't be able to track who I am or what I'm doing. You see what I mean? So I think we have more of a toolkit now with modern technology because we have homomorphic encryption and cryptographic blinding and zero knowledge proofs and all these kind of things that we can construct a different kind of infrastructure. We don't have to have the absolutes where every single transaction is spied on or no transactions are spied on. Neither of those are appealing. Um, and I suppose the fault for this polarized discussion partly goes to it's because of people like me, because maybe we just haven't explained very well how these things work, you know? The idea that you can have these different ways of operating, for people who like, if you're a lawyer or if you've grown up with ideas of ID, which are to do with passports and cards in a filing cabinet,
Yeah.
these things must sound very strange, and perhaps we have to get better at explaining how they all work. But no, that on that I'm optimistic. I think the new technology gives us new opportunities there.
David, in your books, you often explore the societal implications of fintech. What ethical blind spots do you think the industry is overlooking right now?
And well, actually, I mean, I think those the kind of things I was worried about, mass surveillance and things like this and discrimination. Um, I think those all seem quite small now compared with what's going on with AI because we have to build, and I am not an expert on ethics. I mean, I recognize there are issues, but we have to start building these frameworks into AI. This could be a better solution, right? So if you imagine financial transactions where my AI is transacting with your AI and they're both interacting with a regulator AI, that actually could be a better system where people can't do, you know, bad things like front running and insider trading and all this sort of thing. Where the regulator is monitoring the transactions because the regulator doesn't know who we are, etc. So I'm not saying like it's a negative thing, but I just think AI dominates the thinking in that space, and the ethical frameworks we need for AI are the most important ones right now.
Yeah, I think AI dominates pretty much all industries these days.
Well, I think it surprised all of us just how quickly the technology has moved along. I think a couple of years ago, well, in fact, I remember I wrote a thing for Wired back in 2018 saying that in the future bank customers would be robots. But, we all thought this was years away, and we were all taken by surprise just how quickly it's happened.
Yeah, I think it's completely different from what we experienced in the past with all other technology advancements. Usually, you would see something happening like in the scientific community, government, maybe military, then gradually over years, consumer level solutions start to pop up. And then what's happening now is kind of reversed. The government is trying to catch up. and consumers actually, leading the wave. So it's interesting.
No, no, that's true. And I think I don't think it's much of a prediction to say that our strategies over the next 3 to 5 years are gonna be completely dominated by AI. I think I think seeing a bit further downstream actually is really very difficult. I sometimes say
Mm.
to clients, that actually AI is it's a bit of an event horizon. We can see it coming. We just really can't see what's the other side of it. Once AI gets to a certain level, trying to predict where it will go next is, right now I don't see it. I don't see how it's possible, but it's interesting.
David, what's one unconventional idea or concept that's been rattling around your mind lately, but it hasn't yet made into your writing or talks?
Unconventional concepts. Well, I don't know how unconventional they are, but I've long thought that the future isn't a future where we have a single currency. I don't think we're going to end up all using Bitcoin or the US dollar or
Mhm.
a BRICS currency or something like that. I kind of think technology is taking us in a direction where we're going to have a lot more kinds of money. There'll be a lot of different kinds of money. And it kind of doesn't matter to us because the concepts will be very remote. But in a way, if you have if you think about this idea that you have digital assets and you can trade these digital assets continuously in liquid markets, then the idea that you need money as an intermediary begins to vanish. So when you have all these assets, so why don't you just trade those? Now, we're all very familiar with the double coincidence of wants and the evolution from barter and stuff like that. So the idea that I have an asset and you don't want that asset, so we can't do business with each other. Well, I think that begins to vanish. You have these baskets of assets which are continuously being traded in liquid, price discoverable markets. The idea that I would sell, and of course these assets all earn, that's why we're using them. So the idea that I would sell these assets to hold money and then use the money to buy things, that begins to vanish. And it sounds very far-fetched and futuristic, but actually it's not at all. I don't know if you ever remember, I mean, you're probably too young to remember Edward de Bono, the guy that did all the lateral thinking books. You didn't have to go when I was your age, we had to go on management training courses where you had to put different color hats on. I don't remember what they were, but I can't remember. I think green hats were you were an accountant or something, and red hats you were marketing. I don't remember. Yeah, he had these different colored hats. I don't even remember what they were for. But that was Edward de Bono. That was his thing. But he wrote a very interesting paper on the future of commerce, in which he made this. And remember, he was doing this before we had the internet, before we had Mintcoin and all this kind of thing. But basically, he said, look, if things are all if everything is digital and it's all connected all of the time, then basically business goes to these baskets of assets, and you continuously trade these assets. You don't need to come out of these assets into money. And actually, when I read that, um, it's called the IBM dollar. It came out in 1994. That was one of the seminal things, which when I read it, I thought, "Oh my god, that sounds crazy." And then 5 minutes afterwards, "Oh, actually, maybe maybe he's onto something." So if you're talking about unconventional views, I think this view of actually money disappearing completely is, quite an interesting way of thinking about things.
David, thank you very much for your time. It's been a great conversation.
I'm not sure how helpful that idea was.
I like the stress on unconventional side of the question, so that's great. I hope we left our listeners and viewers thinking.
Thank you for asking me interesting questions. I really appreciate it.
You're welcome. For the listeners, thanks for listening till the end. Don't forget to hit the like button on YouTube, subscribe to the channel, and if you are listening this on any of the podcast platforms, don't forget to subscribe and leave a feedback. Thank you very much, and see you next
Talk soon.
episode. Bye bye.